So folks, very warm welcome today to this webinar. This is a ThinkLegal webinar, top tips for a ship-shape debtors book. Today is a pilot that we're running. As some of you know, I've been doing the ThinkLegal family law for a few months now, and I've been absolutely overwhelmed at the support and the networking that's happening on our WhatsApp group and throughout our webinars and videos and we've decided to kind of start venturing into the realm of also doing the same kind of discussions and movement in terms of the business side of things, you know, in terms of helping entrepreneurs and business owners to conduct their business. So I've roped in Cathleen today. She is our commercial law director. She specializes in collections as well as in contracts and litigation to spearhead today's webinar. Obviously, because this is a pilot, we've got a nice small group today, which is actually very cool because it means that we can do quite a bit of nice interaction and we can really engage with one another throughout the content. Just some house rules and etiquette, and I see we've got quite a few more people joining us now. Please, consultant one, use your real name for register purposes so we know who we're talking with. Although consultant one is not the worst one I've had. I think Surfer Dude 73 was probably the weirdest one, and you can't really keep a straight face when answering their questions. Folks, I would like us, even though we're a small group, to really allow Cathleen to go through the flow of her presentation. So if you've got any questions whilst she's going on, please do ask them, but I would ask, please type them in the comment box. I'm going to be moderating whilst Cathleen is going through the content. If there's anything that I can answer fairly quickly, I will do. If it is something which you would like to direct to Cathleen specifically, please indicate, and then I will pose the question to her afterwards. Having regard to the amount of slides, I estimate we'll probably be busy with a program for about an hour and 15. Then we can go into a bit of a Q&A depending on how everyone's time goes. Respectful discussion, dissent, and comments are welcome. Most of us are professionals. This is a slide which I copied from my others. So we're not all family law professionals, but we are all working professionals, and we all have a wealth of information to share. Please keep discussion respectful, avoid hate speech, victimization, or belittling. We are all here to learn. Please don't record or distribute the sessions without consent. We will be recording it and we will be sharing it on our own platform. Right, so what we are going to be talking about today, or what Cathleen's going to be talking about, and Cathleen, you can take control of the presentation so long, is top tips to a ship-shape debtors book. We're going to be talking about best practices in maintaining your own debtors book to ensure that you get paid quicker, better, and obviously more efficiently. Some of the other initiatives that we are doing, or that we are going to start really pushing in the ThinkLegal business platform, is obviously one webinar per month. This is this month's webinar. We are going to be looking at another webinar next month. So if anyone's got any ideas of something that they would like to learn about, free, gratis, and verniet, please pop it in the comment box or pop myself or Cathleen an email. And then also, finally, let me just go through the tick list in my head. Have I forgotten anything? Yes, one last thing. We have opened up a WhatsApp group for business owners as well, ThinkLegal Business. We are at grassroots level. We're not at 100+ members all messaging after hours so that Mervyn Vermeulen has to shout at them on the WhatsApp group, like in the family law group. We are on small beginnings, but it is growing, and we are sharing quite a lot of interesting information over there. I see we've got Advocate Sula Georgia also joining us today. That's lovely. Right, and on that note, Cathleen, I'm going to hand over to you. I'll be moderating the chat bar, and you are welcome to take it away. So folks, please give a warm welcome to Cathleen. She's our Commercial Law Director at Millen Attorneys, and she will be talking about best practices on maintaining a ship-shaped debtors book. Thank you, Cathleen. Unmute yourself and you can take it away.
Thanks so much, guys. Yeah, so as Mervyn said, I'm a debt collection attorney of, let's say, profession. But what I've seen in practice and with clients is that a lot of debt collection can actually be prevented in its entirety if a client actually just takes control of its debtors books. So there's a lot of preemptive measures, we call them, or debt prevention, or whatever you want to call them, to try and prevent that people even get to a point where they are defaulting debtors, or at least to minimize them to a great extent. And then if people default, some measures that you can put into place to actually deal with them internally so that you don't necessarily have to appoint an attorney or a debt collection agent on the first default of any specific client. So we've divided the presentation into certain broad aspects or broad categories. Obviously, there's a lot of information on each category that we can't put into the slides. I think we'll probably go into more depth at a later point on some of these aspects so that we can give a little bit more detail. But this webinar serves to give a broad overview of the measures you can actually put into place, and then to take control, like the presentation said, to take control of your debtors book. So first and foremost, preemptive measures to take control of your debtors book. Let's get cracking. So first port of call, any attorney will be able to tell you the foundation of any relationship with any client. Quite frighteningly, most clients don't have a contract, but the first and foremost, most important foundational aspect of a relationship with any client is your contract. So good old whatever saying to go by is, if it's not on paper, it's vapor. In a legal setting, if there's a contract between two parties and one party defaults, the court will first and foremost look at what the contract specifies. What is the agreement between the parties? Obviously, if it's not on paper, what is the court to believe? Who's the court to believe? So the first party will come and present their case. The second party will probably present a case directly in conflict with the first party's case, which means the court is left with two conflicting versions, and that means the plaintiff has not proved its case. So number one rule of thumb, if you do nothing else, make sure you get a contract, make sure it's in writing, make sure all of your clients sign that contract and that you're not caught without something on paper. Okay. Just let someone into the lobby. Okay, so for the most part, in terms of agreements, you can put into that agreement whatever you want. Obviously, when you're drafting an agreement, you'll make sure that someone who has a know-how of agreement draft the actual agreement. And that's just to make sure you don't end up with a one-pager that's got things that seem important to you but doesn't have the legal issues in there. Just to give a little example is, if you are, let's say, like Kevin Vine in the printing business, you'll make sure to put in there all of the things that's specific to that business, but you probably won't put in a clause that says that if your client defaults, that you can ask for costs on an attorney and client scale. So this is something that's quite important from an attorney's perspective, because obviously the cost that you can recoup from your clients on an attorney and client scale is almost whatever you pay out, versus party and party scale, which is the normal cost that you can claim in any event, which is probably about a quarter of the cost that you'll end up paying an attorney. So that's why it's quite important to have someone who actually knows contracts draft your contract. What you'll always also realize is, or what you'll also see during the course of business, is usually the contract is more in favor of the person or the entity that's drafting it. So in other words, if you're the service provider, naturally you'll have your contract drafted, and the terms of thereof will be in favor of you personally or your business, not in favor of the debtor or the potential clients. That's why we try and draft the contracts ourselves and make sure that we present the contract and not wait for someone else to present the contract. So ideally, what should a contract contain? So like I said, most parts of the contract is quite, it depends on the business, obviously, that we're dealing with. So if you're a painter versus if you supply tiles versus if you supply printers versus services, whatever the case may be, naturally the contract will specify. but there are certain terms that always have to be in your contract. So some of these terms are the details of the contracting parties, the description of the goods or the services that you will render, or the pricing in broad terms. You don't have to put in there literally cent by cent what you will charge, but obviously in broad terms there has to be some sort of pricing. Then the payment terms. The payment terms are quite important because this means once you deliver an invoice, when is it payable? Is it payable on presentation, or is it payable within 30 days? Is it payable within 60 days? This is quite important, especially if a debtor starts defaulting, because how can you demand payment from a debtor on presentation of an invoice, for example, when there's no payment terms and the client comes back and says, no, I thought I can pay after 30 days. Then whatever guarantees or warranties the service provider provides in terms of their contract should also ideally be contained therein. And then the consequences of a breach. So in other words, a breach can be anything, but for the most part, usually a breach is when your debtor doesn't pay. So this is obviously why we're all here, is to deal with these non-paying debtors. So for the most part, we have to concentrate on that consequence of breach. So top tip, I've added a few of these, which I find is quite interesting and is genuinely good tips. To me, it's quite obvious, but I mean, I think for the most part, to people who don't deal with debt collection and attorneys a lot, that obviously this will be quite groundbreaking. So a top tip for your agreement is to add a domicilium clause. So what a domicilium clause is it gives an address, your debtor gives an address to say that this is the address that I'll accept service of any pleadings or notices on. If you don't have an address like this in your agreement, and your debtor decides to move from premises during the course of the relationship, the debtor stops paying. Now you first have to appoint a tracer, you have to find your debtor. Whereas if you've got the domicilium clause in there, you can actually just proceed with legal action on that address. So you can deliver the notices to that address, and you can make sure the summons is delivered also to that address. If the debtor is no longer at that address, the sheriff can literally put a copy of the summons down on the gate, put it in the post box, put it on the ground, wherever he feels fit, but that constitutes proper service, and you can actually go on and get default judgment on that service. On that same note, I just want to add as well, so in terms of a domicilium address, and especially in terms of notices, for the letter of demand, for example, it's good to add an email address in there as a domicilium address, because that means you can actually serve this notice by email. Then you don't have to serve it either by hand or by sheriff. Okay, now we've dealt with we need something on paper, and what does this paper have to contain? So now, on conclusion of this agreement, it's not as simple as you've got the paper and you just send it there, they fill in their details, you get it back. If you do a little bit more homework here, you definitely will spare yourself a lot of heartache or a lot of loss of income in the long term. So there we go into background information. So background information, you'll see the list I put on there. But basically, you want to know who's this person that you're going to be dealing with, who's your potential debtor. If it's a company, you want to see their CIPC record. You want to see, do they own fixed property, for example? Do they already have judgments? Do they have assets? How many directors do they have? Are they already sitting on a deregistration situation where they haven't submitted their SARS returns? All of these things obviously are quite telling of your potential debtor or your potential client at the time of contracting with them. And if, for example, you open a CIPC record and you see this debtor has, or this potential client has 5 judgments, you know exactly who you're dealing with. Naturally, you wouldn't want to be giving this client R1 million credit, because if they're already sitting with judgments, chances are your name's going to be on that list of judgments in a few months' time. So the list of the documents I would recommend getting at the time of contracting with your potential clients is the CIPC record, an asset report. So this isn't something formal. If they've got an accountant on board, usually the accountant will provide this. If they don't, you can ask them in literally, they can put it on a Word document. They can give you a list of all the assets that the company owns, or if you're dealing with a sole proprietor, that the sole proprietor owns. You need the proof of address. Obviously a municipal statement or a lease agreement or some sort of physical proof of the address that they're dealing from. confirmation of all of the directors of the company, and obviously copies of their ID. This is also quite important because remember, if a company closes down, your second port of call will be the directors of the company. And we'll get to that in more detail when we get to the portion on surety. Then bank accounts and confirmation on a bank letter. So this also is quite important. We're going to get in more detail to this aspect a little bit further in. Then the accountant or the auditor details. Depending on the circumstances, you can ask for their financials and then a SARS clearance letter. This just gives you an indication that they're compliant with SARS, which is a good indication in general terms. So then another little old adage that I like to usually use is begin with the end in mind. Don't wait for the snake to bite you. See it when it's coming. How will you execute a judgment if this client defaults? So it's very negative to think about any potential clients in this way, but one has to in order to make sure that you don't fall into that trap. So execution of a judgment can be done against movable or immovable assets belonging to the judgment debtor. Movable assets are things like furniture, computers, vehicles, cash, and cash in bank. Immovable assets are obviously fixed property, that's houses, factories, offices, or unoccupied land. This is why we said 2 or 3 slides ago, obtain proof of assets. The best methods to ensure that a judgment can be executed is to obtain proof of assets at the time of contracting with the client. Naturally, if your client's defaulted, they're not going to give you any proof of any assets. You're going to have to appoint tracers and PRs to get proof of assets or any indication of whether they have assets. So if you've got a list of assets at the time of concluding the agreement, even if some of those assets have been sold in the meantime, if some of them are still owned by the company, you've got something to execute on. So the most viable assets to execute against, therefore the most valuable asset list to obtain proof of, is immovable property that's owned by the client, and then a list of all banking accounts held by the client and proof of that bank account details. So in other words, a bank letter, as we usually have to present to people when we need to receive large payments, for example. It's just a bank letter that's stamped. Oopsie. Sorry, almost missed your tip. So top tip, the sheriff can actually attach money in your client's bank account. Although there's a little bit of an application that you have to launch before the sheriff can go there, it's the easiest form of execution because the sheriff literally pitches up at, let's say, F&B's head office, presents the warrant, and then the bank accounts are frozen. You don't deal with debtors that say, this is not me. You don't deal with people refusing to open gates. You don't deal with dogs barking at the sheriff. Once you've got the application sorted, you can literally send the sheriff with the warrant. We've done a few of these applications. They're not hard, and they usually, you bring the application, you only cite the bank. The only entity that's made aware of the application is the bank. So it's also not an application that's usually opposed or that you struggle to get through the courts for months and months on end. So that is definitely top tip. So if you have those banking details at the time of conclusion of the agreement and you do end up with a defaulting debtor that you have to get judgment against, you know you've got some form of asset to be able to attach. Okay, like I said, we'll get to this point. Sorry, Mervyn.
Sorry to interrupt you. Sure, that is so much info so far. It is absolutely awesome. I see there's 1 or 2 questions. I think considering how dense you are with facts at the moment, it's absolutely awesome. I wonder whether we shouldn't go into a short Q&A based on the first section on contracts before we go on to surety, if that's okay with you.
Happy with that.
Fantastic. So I've actually got a question for you, but first I want to raise Kevin Vine's question, which I've answered very, very shortly. Kevin asks, does a purchase order with terms of payment from a client hold the same weight as a contract? My answer was that the overriding consideration was meeting of the minds. Is there anything further that we must consider in terms of relying on a purchase order as a contract or in lieu of a contract? And guys, while Kathleen answers that, if you've got any questions on the first section regarding contract and due diligence beforehand, please type them now. Alternatively, we are a small group, so you can put your hand up if you would like to ask.
Okay, lovely. Kevin, so anything in writing and that's accepted by both parties, like Mervyn said, there's a meeting of the mind, is in fact a contract. So it doesn't have to be a 25-page agreement that both parties sign next to every single clause in order for it to be enforceable. What I would say is important though, if you want to put all of your terms and conditions on your purchase order, which is completely fine, make sure that it's an attorney or someone with the proper legal knowledge, at least has checked that for you beforehand to make sure that, like I said, you're going to make sure your things regarding printing is in there, but you're not going to be able to make sure that the legal issues are covered sufficiently. So it's always a good idea that even if you have a contract that's already in place, it's not necessary to reinvent the wheel and redraft everything, but it's always a good idea to have someone who's got legal knowledge and especially litigation knowledge to look at the contract and say to you, or the terms and conditions, and say to you, I would suggest adding this, taking this away. This is not so important, or this can be drawn inference. But no, it's absolutely still an agreement. It's great because it's in writing. You can prove that it was sent to the client because obviously you've received or sent by email or however it was sent and received. So you can prove that that agreement was concluded. So on paper and in court, you're still way, way better off than coming there saying, but I said, but he said.
People who conclude gentlemen's agreements usually aren't gentlemen. Isn't that the truth? Then, Cathleen, I've got a question for you on your slide regarding the sheriff attaching money in a client's bank account. I know there are quite a few attorneys in today, and I'm sure some of them would also love to know this. I know when one wants to declare immovable property executable, for example, executing against someone's house, there's a few hoops that you have to jump first. Is that the case with attaching money as well? Must you first go and see if they've got computers and scanners and all sorts of things at their office, or is it something that you can do straight away?
You can actually just go straight ahead with the garnishee. Like I said, you have to actually bring an application to court to have that garnishee made an order of court, and that goes with the warrant to the sheriff. But the only thing you have to tell the court, to prove to court, is that that account actually belongs to the debtor and that you've got a judgment. So you on affidavit very, very shortly note the judgment, which date it was obtained on, what the amount is, whatever the case may be, what are the banking details they're trying to execute on, and they will, for the most part, grant the application almost rubber stamping.
Fantastic. Thank you, Cathleen. That's an excellent one, hey. Right, folks, any other questions before we move on to surety? Please don't be shy. We're a small group today. No one is going to judge you for asking your questions. Fastest fingers first. Reactions, hands up. 5, 4, 3, 2, 1. Going, gone. Let's move on to surety. Thanks, Cathleen. Over to you.
Okay, lovely. So surety, this is from a creditor perspective, the golden ticket, and from a debtor's perspective, it's a noose. So as a creditor, you want to always be including surety in your agreement. So what exactly is a surety? So a surety basically is a natural person. So most of the time we deal with companies, right? So now we're asking a director or shareholder or whoever you decide, whoever's representing the company, you ask them to sign surety, which means they stand to pay the amount that's due to the creditor should the debtor default. So if the company defaults, you can call on the surety to make payment of the amounts due. So in essence, you're giving yourself a second debtor. You're giving yourself a second bite at the cherry when it gets to legal action. And why is this so great? Yes, it's always nice to have two people to try and execute against. But the big problem is when we're dealing with companies, companies close overnight. There's almost no requirements for a company to be able to liquidate if it's whether it's a solvent or insolvent liquidation, whether it's voluntary or by creditor application. It's quite easy to go into liquidation. And once a company is in liquidation, yes, a creditor will still have a claim against the estate of the company, but we all know companies don't go into liquidation because they're sitting on millions to be able to distribute to their creditors. They go into liquidation because they don't have money. So if we've got a surety, regardless of what happens to the company, regardless of whether the company goes down or still trading but just doesn't want to pay, your surety is good on paper for the money. So obviously the only question then is, does your surety have money? But that's not a concern at least at the time of conclusion of the agreement, right? So for surety to be valid, there are certain requirements. There's only two, to be frank. The requirements is that the surety has to first be in writing and that it must be signed by the surety or on behalf of the surety. So my suggestion always is to add a surety agreement into the main agreement and to insist upon all companies having to sign surety. Then when it's signed at the same time of the agreement, you'll make sure obviously it's in writing because it's done with the agreement and obviously it will be signed. Best bet is to make sure there's on the suretyship documents itself. So if it's part of the agreement, make sure on the specific portion regarding surety that there's space for a signature, that it's not just signed at the end of the document, because obviously then your surety can come back and say, no, I never intended to give surety. I signed the agreement as a whole and on behalf of the company, but not as a surety. So, like I said, I've already given away my top tip. So the top tip is a company can close overnight, but if there's a surety involved, settlement is far more likely. I think this goes without saying. If someone comes to my house where I live with my family and tries to execute a judgment for the company, I'm going to make sure either I make an arrangement regarding settlement myself if the company is closed down, or I make the company pay. I'm not going to have my house executed upon. So always a good idea. Okay, next important thing, and this goes with the background information, is vetting of information. So vetting, I find it quite an obvious term, but for those who don't find it that obvious, means you check the information that you've been given by your debtor or your potential client, and you make sure everything is accurate and true. So unfortunately, in business, we do not always deal with people that are completely honest. Sometimes we deal with people that are completely honest, but just don't have the business acumen to make sure that their company survives. Sometimes we deal with people that have a phenomenal business idea, but haven't gotten off the ground yet, and quite frankly, financially are a risk. So it's important to, when you get all of the documents from your sales rep or whoever goes into the field and makes sure that everything is completed and everything is obtained, is to do these background checks to make sure, one, who am I dealing with, and do I want to deal with this person that I'm dealing with? So first and foremost, best idea is to check credit records, or check, credit reports. So you can get quite detailed reports from the CIPC and credit bureaus that list judgments, it lists defaults, it lists for the most part assets. The only assets that don't really generally appear on these records are the loose assets or immovable assets such as vehicles and so on. But I mean, immovable assets are listed on these reports, which is obviously best bets if you want to execute upon a debtor. Then something that sounds quite simple is to check their website. So if your client comes to you and wants to sign up, you go and you see they've got no website or the website doesn't work. Obviously, it's a red flag. Then further tip is to call your potential client. So I don't mean phone John that you've just had a discussion with and who's the director of the company. I mean phone the company's number and speak to the receptionist. Obviously, this ensures, yes, one, the company's there, it's active, someone is actually working there, and that the contact details are correct. Then another very important thing is to confirm the details of all the directors, including their contact details, such as the addresses, phone numbers, and email addresses. So naturally, let's assume we've done everything right until this point in time, and the directors have all signed surety, or at least you've got one director signed surety. Then, having confirmed the details of the surety, if this was not already included in your agreement, make sure you've actually got someone to properly contact. Dealing with a surety where you want to issue summons on, you've literally just got a name and ID number, means you're going to have to appoint a tracer to find an address. So this gives us a good starting point if we've got all of these details of the directors. Then the further thing is, we often do see contracts where people add trade references. So I've been trading with this company, I've been trading so long, this is usually the credit limit, but very, very unlikely for the potential service provider to actually phone these trade references. It's very important though. It's the same concept as when you're appointing someone in your business and phoning their references to find out whether the person applying was a good employee at the previous business. If you phone a creditor, that's also doing business with this person that wants to do business with you, and they say to you, no, they're okay, but they never pay their accounts, or they constantly pay in 90 days, or you have to send a letter or two for them to pay the accounts, obviously that's a red flag. So it's always a good idea just to make sure, phone the references put up, and then at least you have an idea of who you're dealing with. And then obviously if you find these references and they don't even know the company, or the references doesn't exist, that's literally a bullet that was dodged. So top tip, do not warn the client that you'll be calling to verify the details. Like I said, when you do phone the company's telephone number and speak to the receptionist. Just make sure, hello, is this the company? What's your address? The obvious details. It's basically just to make sure you're not dealing with a company that's already sort of down the drain, and that's literally last ditch effort to try and get clients, or try and procure your services to try and make the company float. Okay, then a deposit. Now this is a niggly thing for a client. They don't want to hear this word. It's right there next to surety, but it's so important. So at the inception of the agreement and prior to any work or services being rendered, you have got the most negotiating power. So someone comes to you, they desperately need your service. You say, okay, willing to help, but at least I need a deposit of, let's say, 10,000 Rand. When you anticipate the work to be done is, let's say, 50,000 Rand, and your client can't pay the deposit or refuses to pay the deposit, that is a warning signal, red flag. Run away as fast as you can. The chances of a client really wanting the service or the goods and not having some form of deposit available is concerning, to say the least. We're not talking about when you're asking for R1 million in deposit. Obviously, most companies and people won't be able to put R1 million on deposit, but a sort of deposit is definitely, I would say, a must, and definitely gives you a good indication of what type of potential client or debtor you're dealing with. So the amount of deposit really does depend on the business. It does depend on the type of service or goods that you actually deliver. My best advice would be, if you're delivering goods, don't deliver anything until you've had full payment. So if it's goods that have to be manufactured, it's best to get a deposit to do the manufacturing, that it at least will cover your manufacturing costs, and then that full payment is made prior to delivery, in order to safeguard your rights. Obviously, if it's services, usually it's not a set in stone amount, so then it's a good idea to come with a proportionate proportionate deposit amount, sufficient at least to make sure that you don't sit at a loss at the end of the day. So if you know you're going to have to, let's say you're an accountant, you know you're going to have to put a junior accountant on the portfolio, which is going to cost you 5,000 Rand a month, make sure you get a deposit of at least 1 month of 5,000 Rand to safeguard that minimum requirement on your end. Okay, another important thing. A lot of businesses do business on credit. So great idea. It's not always, I mean, if you're dealing with millions, obviously it's not always possible to pay up front, but it's also extremely important to limit the amount of credit that one provides to any potential client. So the credit limit should be indicated on the agreement between the parties itself. That is more from a litigation perspective. It is important to know. Then credit means that no prepayment of a deposit usually is forthcoming, or payment in full is forthcoming. Obviously, they're dealing on credit terms. So the provision of credit should be carefully considered prior to granting, and I've added a few things to consider, such as, 1, is your company registered as a credit provider with the NCA? Now, this is quite important, because if you have given credit to any sort of debtor, let's say you've given them R1 million worth of credit, they forfeited on payment, and now you wish to issue summons and collect that payment by means of litigation. It is very possible for your debtor to raise a dispute and say you were never registered as a credit provider. However, you found yourself in the business of providing credit, and your entire claim can actually be dismissed on the basis of that you are not a credit provider, but you did business as a credit provider. Then, has the requirements of granting credit been honored, especially affordability considerations? So this is also important. We don't want to be giving credit of R1 million to a company that can afford only to pay 10,000 Rand a month, for example. And then why does this client require credit? So obviously, if we're dealing with a turnaround of, let's say, 2 million a month, this would make sense. It would make sense that they would want credit. But if we're dealing with a monthly turnover or monthly service turnover of around 10,000, it makes no sense. They would want credit because obviously if you can't pay 10,000 a month now, this month, how are you going to pay this next month? And then the other very important consideration is internally is, as a credit provider or as a service provider, can you actually afford to wait for the payment? How is your business model? Is it a situation where you can afford to wait the 90 days and then only jump up and down? Is it a more cash, like a hand-to-mouth cash situation where you need the cash coming in as the invoices go out? It really does depend on the model of your business, whether you can actually allow for credit at all. Okay, this concludes the first broad category of the presentation. So I'm going to give space for any questions now as well. If anyone has a question on the last few topics that we discussed, now is the time to ask them.
Excellent, thank you, Cathleen. Sure, that is the tips that you've got here. The one, it's actually more a comment than a question. Just checking out a website. I mean, just looking for a service provider, for example, on Facebook or Google, how important is it, not for all of us, to check that they've got a website, and even more so in our businesses, selling to people, and how often don't we do it? Very interesting. I see we've got a heck of a lot of lawyers in today. I wonder whether the adage is true that the barber has the worst haircut, or it's usually the attorney that's sitting without a will. I'll probably stick my hand up there. Guys, what questions have we got for Cathleen so far? Please feel free to stick your hand up and ask any questions before we go on to the next portion, which is in-house measures and control of your debtors book. Have we got any questions, comments, or queries thus far? Speak now or forever hold your peace. Alfred, this is a very interesting one. If you include an email address as a domicilium, and Alfred, your spelling is not bad, well done. Do you need a court order to use this? Actually, an excellent question, because there's recently been case law in this regard, hasn't there, Cathleen?
So on the domicilium issue, so if your contract allows for notices, for example, to be sent by email, you do not need a court order. You can just send it by email. Obviously, you'll just need to in court lead evidence on the fact that there is a clause accordingly and that it was sent. You need to show the proof of sending, etc. On service of a summons, it always has to be done by sheriff. So there's no way around getting this service to be done by a sheriff unless you do a substituted service, but let's not get into too much detail now. The thing that is important, yes, like Mervyn said, there was case law recently where courts are increasingly accepting service of the Section 129 letters of demand by email, regardless of whether there was an agreement of any sorts. So previously, you would know that had to be sent by registered mail. Registered mail is quite a niggly thing, however. It's actually just you send that registered letter just because the law said you have to. You don't send it with any hopes of it actually being delivered to your debtor. It is not delivered. When they do get the slip, they will not collect it. That letter is as good as gone. You might as well have put a tissue in the envelope and sent it that way. If you do, however, send it by email, chances are your debtor is actually going to receive it. We know we all just deal by email. We don't even look at snail mail anymore, or anything on paper for that matter. So your debtor might actually then get the letter of demand. They might actually read the letter of demand, and they may actually settle your claim. Whereas if it was sent by snail mail, registered mail, they likely won't get it, and there's no way of them knowing of the claim in any event. But you've ticked the boxes in terms of legislation. So absolutely, send it by email. Get an email address. Get an email address in your contract. Make sure you've made your own life easy. You don't want to be arguing this point in court if you can just put it in an agreement.
Absolutely. I mean, if you look at the plethora of case law, I mean, from way back in the day when I used to do this, I mean, there was that big case of Rousseau where the bank failed in the claim because the Section 129 was not delivered correctly. So very, very important. Then I see Fazana's got a few questions on Section 129, which I'll go to in a second. But I see, Latifa says, all good, Kathleen just answered my question. Hey, Kathleen, you're preempting the guy. Fazana's got two interesting questions. I'm actually going to just go to the first one and then go to the second one second, Kathleen. She asked, is it necessary to send a debtor a separate Section 129 letter apart from the letter of demand? And what I'd like you to do, if you don't mind, is just for those of us who are not debt collectors, just explain what is a Section 129 so everyone kind of understands it. And then obviously we can deal with Fazana's question, is it necessary to send a separate Section 129 apart from the letter of demand?
So in practice, I never actually send a letter of demand. I just send a Section 129. Reason being, a lot of agreements aren't credit agreements, but they become incidental credit agreements if we defer payment, if we add interest, or if a service charge. Then it's considered by the NCA to be a credit agreement because it has become one. As a rule of thumb, I would never suggest sending two letters of demand. It's just a waste of paper. If the first one is actually delivered and your debtors are all inclined to pay, they'll actually pay on receipts of the Section 129. So my suggestion is just rock and roll with the Section 129 from the beginning. You know you've complied with legislation if it applies. Even if it doesn't apply, that's great. So then you've still done your letter of demand. It doesn't really matter that it's in terms of Section 129 or whether it's a normal one. However, if you had to do the 129, then your normal letter of demand that's not sufficient. Then you would have had to do the 129. So best suggestion, just go straight ahead with the 129. Don't even bother with the normal letter of demand.
Absolutely. And, you know, the Section 129 then obviously gives the debtor various options if it hasn't changed in the interim. And I mean, that's like going for debt review, which is obviously not going to be relevant for companies and what's the other? Is an ombud or an alternative resolution or making a payment plan, etc. Then Fazana asks a very interesting one. Can a letter of demand be sent over WhatsApp or a messaging platform to the debtor? Now, that's a very, very interesting one.
So it's an interesting question. There isn't case law at the moment about it. I mean, the email case law only came out in the last year. So I don't foresee that it's not going to be possible. I would say if the only thing you have is a telephone number and you can't in any way possible get an email address, go ahead, send it via WhatsApp. Worst case scenario, you're going to argue it in court. I don't foresee any judge refusing to accept it via WhatsApp if we are already at a point where we're accepting service by email.
I tend to agree with you, Kathleen, and I think it's also one of those things where the agreement is so important. You know, perhaps consider putting into your agreements the client consents to receiving notices via text messaging services such as SMS or WhatsApp to this number, and almost nominate an electronic domicilium. What are your thoughts on that, Kathleen?
Great idea. It's always good to put it in writing, get an agreement on it. You can get away with pretty much anything if it's agreed upon. So if you've agreed by sending legal notices by WhatsApp, don't foresee that a judge probably will not even question or query it.
Absolutely. Alfred asks, I've had a legal professional argue that a summons was as good as a letter of demand. Your comments? It's like saying antibiotics are as good as an operation, isn't it?
Yes, no, it depends on what is your end goal first and foremost. What type of data are we dealing with? What type of agreements are we dealing with? So obviously, if we're dealing with a credit agreement, there's no way around getting the 129 done. Just for interest's sake, if the Section 129 has not been done, you can't proceed with summons. Then your summons is premature. There's a lot of case law that says doing the Section 129 while summons had already been issued is not sufficient. That doesn't cure the issue with the Section 129 not having been complied with. So literally we'll be at a point where you have to withdraw your summons, do the 129, reinstitute action. So if it's a credit agreement, no way around it. You do the 129. If it's a normal, let's say, an action for damages and you don't have to do a Section 129, Why on earth would you not do letter of demand and ask nicely for payment prior to dropping a summons on someone? So there are answers that are correct in this instance. If it is an issue where you know full well your debtor is not going to be willing to pay, there's been correspondence, yes, then you can proceed without the demand. Demand is not always required by legislation. So in certain instances, yes, it is. Certain instances, it's not. It would, however, not make logical sense to want to give a debtor its first indication of any pending legal action or claim by way of drafting and serving a summons, especially having regard to the cost involved, and especially having regard to the fact that there could actually potentially be settlement prior to summons being issued.
Absolutely. I think that's a very, very good point, Kathleen. To add on to that, I mean, there's limited legislation. I mean, we've got the Credit Act, which is one big one. Then the Companies Act, if you want to liquidate, you have to do your Section 345. And then the third one I'm aware of is the Institution of Legal Proceedings Against Certain Organs of the State Act. Nice short name for that legislation. Those are the three instances I know of. But it is still sensible to do a letter of demand. And I think one thing that I'll ask some of our debt collectors who are in today, and I see there are quite a few, to chime in on afterwards is, to what extent is debt collection really a bulldog, I'm going to bugger up your life if you don't pay exercise? I've seen that very often you get much better results by actually talking to a debtor and saying, look, where are you at? What is preventing you from paying? Is it a case that you dispute the claim? Is it a case that you just don't have money? Is there something that we can resolve? And very often that's actually the ticket rather than going balls to the wall, isn't it, Kathleen?
Yes, definitely so. I've seen actually most of the debt collection matters that we deal with, I would say we're sitting at a percentage of probably 70% where the debtors actually settle on our notification to them that they've been handed over. So very few instances do people not pay because they don't want to pay. So it's usually either they have a dispute, they generally don't feel they should be paying the money, alternatively, they don't have the money. So if it's a case of they don't have the money, it's usually a cash flow thing, and your debtor will come back with some sort of settlement proposal. They'll propose to pay it off over a few months or whatever the case may be. Sometimes they just need a month or two, and then they'll be able to pay the full amount. And then, like I said, the other alternative is that they have a genuine dispute. So they said they wanted you to cut the hair into a bob, and you cut it short. They don't want to pay for that haircut. No matter what you do, they're not paying for it. So on those that genuinely just don't have the money, I would estimate at least 50% just have cash flow issues. So if you say to them, listen, guy, what's the problem? You have not paid my account. How can we sort this out? 99% of the time they'll come back with okay, can I pay this over the next 2 months, or can I pay it at the end of May, or whatever the case may be? And you'll probably get your payment, albeit not in one part usually, and albeit not immediately. But yes, it's not always necessary, and always consider the cost and the time involved. I think the cost, yes, everyone anticipates there will be cost involved in legal action. However, no one anticipates the extremely slow movement of the legal action in this country. So if you're willing to issue a summons immediately, if that's your modus, you want to just issue summons, you don't want to give no one no chances, send the letter if it's required and just issue the summons, and then you see, okay, a dispute was raised, then you're in for a 2-year, 3-year legal battle. And that's the unfortunate circumstance that we're dealing with in South African courts. But yes, no, I would say at least in 70% of all instances, it's not even necessary to issue a summons.
Absolutely. I think it was Ben Franklin. I'm going to kill this quote and maim it horrendously, but I think he said an ounce of common sense outweighs a pound of law. I'll get the exact quote, but that really is what it comes down to because of the delays in the court system, etc., which are trite by now, but it is a reality that we're dealing with. All right, folks, any other questions, comments, queries before we move into okay, Alfred asks, in respect of prescription, what is considered an acknowledgement of debt by a person when a debt collector calls? If you answer the call and acknowledge that it's you who's talking, does that revive the debt?
Would be nice, but no.
No, we wish.
No, no, I think here we just have to understand or accept that simple English will prevail. If someone says yes, I know that I know I owe the money, then obviously that's an acknowledgement of debt. If they just acknowledge it's them speaking, no, that's an acknowledgement of identity, not of the debt, unfortunately.
Absolutely. And also another interesting thing in terms of the new amendments to the Credit Act, if I'm not mistaken, it's actually become unlawful to try and recover prescribed debt, isn't it?
Yes, so they are definitely. Look, I wouldn't say just abandon prescribed dates. If someone comes and they just make a payment of free will, great stuff. Do not, however, coerce or force or threaten or anything, especially when you're being recorded. Please never, ever be recorded.
Yeah, never be recorded ever. Throw away your iPhone.
Yeah,
Right. Thanks, Kathleen. Let's go on to the next
no
section.
problem.
Guys, please keep the questions flowing. We're going to have a nice Q&A section afterwards, and we'll deal with any of the questions that come in. Over to you again. Thanks, Kathleen.
Lovely. So the second portion of the webinar is regarding your in-house measures. So, okay, we've got the client. The client's been onboarded. We've done our due diligence. We've done our checks. We've done our balances. We've got a written agreement. They are now in the system. What do we do to make sure that things go smoothly in terms of invoicing, in terms of collecting those debts, etc.? So my golden ticket word is a debtors clerk. So what is this? What is this person? So a debtors clerk, it doesn't have to be someone you specifically appoint to just deal with the debtors. It can be your accountant that usually sends out the invoices that can be given the additional tasks. If it's a large company and you've got substantial amounts of debtors, it's best to actually appoint someone. If it's literally a 2 or 3 person company, you can even outsource this situation. Usually, I mean, small companies actually outsource their accountants already. So it's very easy to outsource this duty to them as well. So why do we need one? Why do we need a specific person allocated this duty? Because as one knows, and as we've probably all learned the very, very hard way, if you make it everyone's job, it's no one's job. No one's going to do it. It's just going to be there. It's going to be everyone's last priority. They're going to focus on whatever is actually on their job description. It's critical to place that responsibility with a specific employee that'll place emphasis on the duties. So also, if you have an accountant that's literally running at 120 miles an hour every day of the week that does not have time, it makes absolutely no sense to give them this additional duty. They're not going to get to it. So it has to be someone who can actually sit and focus on this job and focus on this role and the duties and terms thereof. So who's the best person to fulfill this role? I've actually already answered my own question. But ideally, if the company is large enough and if there's cash flow, it's best to actually appoint someone specifically for this duty and to attend to these duties. If it's not, if the company cannot afford to appoint someone specifically, or it's just a small company, we don't want 5 employees, we have one is a debtors clerk, you can give it to your accountant. If you have no accountant, you can delegate it to an employee who's actually in-house and can be trained to do the job. And then if there's no employee that can actually assist, obviously you can outsource this specific duty. We'll get into the intricacies of what the debtors clerk actually does, but the best person to fulfill such a role is usually someone with some sort of accounting knowledge. Okay, what does a debtors clerk do? So the debtors clerk ensures that the company's debtors are under control. The debtors clerk should know which clients are nearing payment date, and they must monitor that those payments are received. I think all of us get so busy, we don't know when invoices were sent out. We don't know when those invoices are due. It's impossible to remember every single client's name. It's impossible to know when last that client paid. This is why we have a debtors clerk, because the debtors clerk can literally sit, pull the relevant lists or go through whichever list or whatever system they're dealing with and see, okay, person X is not paid, they're overdue now, it's been 30 days, they've not paid. Or if it's a large payment that we're expecting and that we know is quite critical to the business, obviously they can monitor that payment's received on the date that it should be. And if it's not, literally minutes after, they can follow up on it. So the further thing that a debtors clerk does, like I said, they follow up with the clients that are in default. So 2 methods of following up. Firstly, obviously, a telephone call to say, listen, you've missed your 30 days or whatever the case may be. Please effect payment. And then if we see that has not happened, so obviously you give them a day or two to make the payment. If we see that has not happened, then they go on to send control letters. So control letters also, it greatly depends on the company and the company's requirements. But basically it's a letter telling them, listen, you've forgotten to pay, please pay. You can put them in increments where it's the first one says, please guys, you haven't paid, please pay. The second one can be a little bit more stern. The third one can be even more stern, and then only send the letter of demand. Alternatively, if your company is not of that nature, you want to send one letter and then go ahead with the letter of demand, obviously your control letters will just be one reminder letter and one letter of demand. Genuinely does depend on the company and also on the company's requirements in terms of finances. Do we have the luxury of letting people wait for 60 days, going on with this a process of 3 control letters, for example? Then the debtors clerk must report to whomever she has to report to say, listen, these are the guys that have defaulted, these are the guys that have not paid, these are the guys that have paid, this is what I've done, this is what the response was, all those sorts of interesting and necessary things. And then follow up on all overdue payments on the date that payment was promised. So if they'd phoned, for example, you've missed your 30 days, we phoned on day 31, they promised to pay by day 35 or whatever the case may be, then on that day to phone again and to say, okay, listen, you promised payment by today, please can you send me the proof of payment, or just a reminder that you have to make the payment today or whatever the case may be. And then another important aspect, and this is important especially for a debt collector attorney. I know this doesn't seem so important for the company, but to compile handovers. So an attorney can do pretty much nothing if we don't have the paperwork and the paper trails and all of these things that the company has in its possession. So if there's a debtors clerk that can actually compile the handovers, inclusive of statements, reminders, sent, the contract, the invoices, all of these things, then obviously once you do decide to hand over any accounts, then the attorney can literally get cracking the moment that they receive that handover. And understandably so, for someone whose main focus in the business is to go out and get clients, that person does not have the time to go and sit and compile handover sheets or handover documents. So this is why this is the best person to do that job as well. Okay, how do I make my debtors clerk as efficient as humanly possible? So first thing, and I think it actually goes without saying, is we need to train this person so that they can first and foremost know whatever the internal processes is. So obviously management or ownership of the company decides what are the processes we're willing or wanting to follow. And then this person has to be trained on these internal processes. They need to understand the documents first and foremost. So your statements or your contract or whatever the case may be, they need to understand the actual document and they need to know where to get this document. Again, as it's ineffective for an attorney to have to wait and wonder and ask and pray for documents in order to actually proceed with legal action, you don't want your debtors clerk to sit and wonder where to find the documents. So they need to be able to independently go, find the documents, get them, look at them, understand exactly what's going on there, download statements and whatever the case may be, however the system in your own company works, so that they can just run with the job. And then they need to be geared with effective collection methods and communication with debtors. So this is something somewhere between a sales representative and a debt collector. When we're dealing with someone who's a little bit late on payment, but we don't want to chase them away entirely. So a debtors clerk ideally must be trained on how to speak to your debtor, whereas your debtor understands, listen, I need to pay my account. So we can't be so friendly, but also not to come across so harsh as to chase away these clients completely. Because obviously, if it's someone who's just a little bit late on payment always, you don't necessarily want to chase the business away. You just want them to understand they need to pay their accounts on time. Then the company's debt collection policy and procedures, that's also something that'll up the efficacy. So if I had to do a poll, I think no one will have any debt collection policies and procedures in place, but it's so absolutely important. If we don't have a policy or regarding debt collection, every single defaulting client becomes an issue for the CEO or the deciding partner or whoever makes the decisions in the company. It's not an ideal situation. It just takes away time from your actual job. So there needs to be a policy to say, okay, this is the policy. People need to pay within 30 days. If they don't, these are the steps that are followed by my debtors clerk. If they still haven't made payments, the debtors clerk compiles a handover sheet or a handover bundle. I need to give the final okay to say yes, hand it over, yes, no, maybe, and that person has to be able to do that quite independently with just a basic tick at the end of the process to say yes, CEO or whoever makes the decisions, yes, go ahead, hand over to the attorneys. That's in your policies and procedures. The standard process on collecting on your debtors. So standard process, mostly that's for in-house. So do the invoices go off automatically or do we send them off? So if it's a smaller company, we actually have to send them off manually. That has to be inside of your standard process. If we have a turnaround time of 30 days payment after presentation of the invoice, then that has to be in the standard process. What happens if that person doesn't pay on day 30? Do we give 1 or 2 days? Do we wait just for the bank statements to reflect? Because we know usually banks do take about 2 days if it's an outer bank transfer. All of these nitty-gritty, silly little things that we accept is so obvious needs to be in a standard process regarding your debtors. This is first and foremost, so you as a business owner have complete and utter surety of what is happening with your debtors and when someone has actually not done their job. And in the second place, if you've given someone the job to do, that they actually know exactly what to do, they can go back to the guideline and see, okay, this is what I do. I literally usually give dates on which to do what. So if the company wants the invoices to go out twice a month, you literally put in their guideline, or in the standard process, you put in there on the 15th, on the 30th, send off invoices. Then we also need to give them a letter of demand, an actual precedence of the letter of demand. You can't be expecting a debtors clerk to draft a letter of demand from scratch, especially, but also even to put in too much detail. So there has to be some sort of precedent where they can literally just send off the letter of demand, having imported detail from your system, or worst case scenario, just having inserted the amount due and whoever the debtor's name is. Then scripts for telephone contact. Like I said above, it's a touchy thing to be phoning clients for money. So you don't want to come across so harsh, nor do you want to come across too softly. So it's always good to give them scripts, give them, this is what you say, standard, not on client by client basis. This is the standard script. In this circumstance, this is a script. In this circumstance, this is a script. And then likewise, a script for emails and SMS contacts. For example, if you can't reach them telephonically and you have to make first contact regarding payment via email, that's the email that you send. If you can't even get an email through, that's the SMS that you send. If they've made a promise to pay, this is the SMS you send. It's just standard things that you put into a little bundle for them to be actually able to do their job, first and foremost, and secondly, to make sure that there's a standard process being followed so that everyone knows what the process is and it's always run and utilized in the exact same manner. Then, like I said, handing over. Your debtors clerk needs to be able to do this quite independently from the company or the powers that be. Naturally, you'd want someone to do the final oversight or the final okay, but you'd want ideally your debtors clerk to at least be able to compile the bundle to be able to send it to the attorney so that you don't have to go and look for documents, look for originals, look for communication between yourselves and the debtor, all of those things. So when this is obviously going to be in the policy that you decide as a company internally, but when do we hand over? So it's necessary to hand a debtor over when it's evident that debtor is not going to make payments of the account willingly. So if you see there's going to be some measure of force required, then that's a good point to actually hand over to attorney. Alternatively, when there's a dispute on the services or the goods that you're unwilling to concede on. So if there's a dispute and you're like, okay, they may have a point, obviously you're not going to hand them over. You're going to chat to them and say, listen, would a discount work? Can we do a payment over terms, or whatever the case may be? The ideal time to hand over debts is within 60 days from the debt becoming due. So fresh debt is most likely to be collected without legal action. The older the debt is, the less likely it is for actual collection. It's not a scientific thing. I can't tell you exactly why. But my suspicion is that people see if they've been left alone long enough that they're just going to get away with it. No scientific research about that. But the quicker you hand it over, the fresher that date is, the more likely that you're actually going to get your money. So there's no point in just sitting on it. If it's obvious they're not going to pay and it's still within 60 days, just hand it over. Let the debt collectors and the attorneys that don't mind being shouted at be shouted at. Okay. The effective control of your debtors book should include the handover of defaulting clients to an attorney for collection. Now, this is a very broad statement, and yes, it's a yes or no thing, but it's important to hand over clients, and the reason for this is word gets out. If you are the type of company that never hands over anyone, so you do one or two follow-ups, they don't pay, and you just leave it be, word's going to get out, whether it be with specific clients that have already encountered this in your company or alternatively outside, but it will be known that you do not proceed with legal action. I can tell you of a few companies that don't proceed with legal action. They do soft collection, that's it. And if a client comes and sits in front of me and says, I don't have the money, I don't want to pay, I don't know, whatever excuse they come up with, and it's on that list of people that I know never ever proceed with legal action, I am definitely going to share this information with my clients, and they most likely will not pay it. The most debtors, like I said just now, actually make payments on handover, which is quite weird. I think people take chances and they see when an attorney gets involved, they see, okay, these people are serious about collection now. So from my end, usually I actually get money from debtors after just sending them an email telling them you've been handed over and this is the amount. Usually not even necessary for a letter of demand to be sent. Obviously, this is what companies want to hear because they want their money. Then debt collectors and attorneys are trained to do this. It's our job. It's something that we deal with every single day. I'm not stressed about people shouting at me, and also I don't really feel bad if you tell me your cat's not going to eat this month. It sounds very heartless, but the fact of the matter is, in appointing a third party, this party does really not, I really don't know the ins and outs of your clients. I really don't care. My only prerogative is making sure that my client gets paid, because at the end of the day, if my client gets paid, my client is happy. If my client does not get paid, my client is not happy, and it's going to become my problem. So your cat not eating is not going to become my problem. So sorry. Then obviously we've got some tools that we can use. So certain tools, obviously we all know the summons, we all know the letter of demand, but I mean, I can add a default listing on a client. So if it's a small debt and we've got no intention of proceeding with summons, you can still do a default listing after doing the letter of demand, and that listing is going to lie there on their credit record for a year, which is also something that next time you want a cell phone contract is going to be very bothersome and is going to be something that you're going to action to make sure that thing is removed. If a matter must be litigated, your attorney is going to do that. And obviously, then your attorney's already started on the process. It's not necessary to then only hand over. It's not an old debt. It's literally just part of the process, next step. Then an important thing, and I understand for smaller business, yes, it's great if someone can take the burden off, but you don't always have the cash flow. But it genuinely just takes off the burden of sitting at your office worrying about doing the job, getting in new clients, getting the billing done, doing all these things that we do as business people. And then on top of that, stressing about your clients not paying you. And how am I going to phone this client now? I know she's going to tell me this story again. I know she's going to tell me about our grandchildren. And it just takes all of that emotional drama and stress off you as well. So this one I've actually also already covered, but top tip, the younger the debt, the more likely these debtors are to pay. Very important thing to remember. Do not let debt sit and fester and mold. Nothing good ever comes off this. Then external, okay, let's just pause here. If anyone has any questions regarding the debtors clerk and the internal measures, because that was quite a sizable chunk of the presentation.
What have you got against cats?
I don't have one, so I don't have anything against them, but no affinity for them either.
It's interesting while we wait for the questions to come through, and guys, please feel free to stick up your hands. Something that I've seen, and I'd like you to comment on, Kathleen, is how many companies have such a good set of intentions and they have good processes, but doesn't it always fall short? You know, how often have we received handovers where next to the surety everything's filled in, but it's not signed?
Yes, I think we'll do a separate webinar on that, how to train your staff to make sure that your attorney can actually use your paperwork, because that is a very unfortunate reality is um yeah, contracts not being completed properly, not being signed at all, people wanting amendments, but then the contract had already been signed, all sorts of lovely little issues, but that all just it comes down to training, it comes down to training of the staff.
Absolutely. And, you know, I think one of the things that I've realized, and I think that you've highlighted beautifully in this last section, it doesn't look like there are questions coming through. So I think after this, we might go on to the last section unless people put up hands in the next couple of seconds. Friday. So one of the things I think regarding debtors management is people think it's a once-off thing. Have a good contract. Make sure your invoices go out and the rest will take care of itself. And it really isn't, hey. It really is something that that you have to do every day. It's something that you have to practice, isn't it?
Absolutely. No, it's definitely most manageable way to do it is to make sure that you've got a process in place. Get someone to actually do that process, do the job. Like I said, get a debtors clerk or get someone to be dedicated to that job. So that it becomes a day-to-day and it becomes just part of the process. Because as with contracts and vetting and getting all the background information, the first few that you have to do that way is going to be an effort. However, after a few times where you've trained your staff to say, okay, this is where they sign, this is what I need, I don't accept the contract without all of these documents, it becomes part of the normal, this is my normal day job. You don't even have to think about it. It's just one of those three things that we just have to do.
Absolutely. It's like, I think Warren Buffett spoke about motivation. It's like brushing your teeth or bathing, you know, and that's something that you have to do every day. You know, it's not something that you do once. Kevin, I'm sure you know the quote much better than I do. You can correct me in the comment box, please. But I think it's the same with debtors books. You know, I think it's one of those things where you really have to practice it on a daily basis, because otherwise it will get away from you. And honestly, with life being so fast paced, I've had a look at some of our personal debtors and looking at the process, and you think, my word, how time flies, you know. And you think, I better quickly move because time goes like this, and then the debt's subscribed. 3 years is not a long time, is it? So, no, absolutely. It really is a measure of practice, practice, practice. Cool. So, external measures, control of debtors book. I'm very interested to see what this is about. So, over to you, Kathleen. Guys, keep the comments and questions flowing on this last section, please.
Awesome. Okay, so external measures, I think, speak for themselves. That's when we have nothing more to do internally. These guys are just not willing to pay. They come with all sorts of stories, all sorts of promises, but it just never comes to fruition. Then, absolutely last resort, nothing else will work, is legal action. So, once it's evident that your debtor is not going to pay off free will, so you've done everything internally that's been prescribed, you've tried, you've phoned, you've done everything, and they're still not paying, then you must hand over that debt. Obviously, if that's the company's internal policy, and I mean, we can get into great detail about that, but in short, if the company has a policy that, yes, we do always hand over, then we know we do hand over. If there's a policy in place that says, okay, we only hand over when the debt is greater than a certain amount, then we know that's the only time we hand over. So naturally, there's all sorts of gray in that as well. But yes, rule of thumb, if it's obvious they're not going to pay, it's time to hand it over. Then, importantly, I think appointing an attorney and dealing with attorneys is such a daunting thing. Obviously, we don't really get it because we're that guys, but I can understand it's a daunting thing because first and foremost, we understand it to be costly. Legal action always is. It's really, if ever, free. But it's important to work out a plan with your attorney and to say, listen, these are my requirements. This is what I ideally want to see. How can we work out a plan of action? How can we work around what my requirements are and what the absolute requirements are and what your requirements are? And how do we want to pursue these debtors? Some clients that I have literally tell me, I'm not at all interested in pursuing legal action or issuing summons. We only want to go the soft collection route. Some clients wish to do the summons, but they never want to take it any further. So they want the summons to be served, but only as a last warning, but they're not willing to pursue it any further. Others again want to go full. They want to go the full trial. They don't care how much it costs. They don't care how long it takes. They want to bring a point across in essence to their other clients to make sure that everyone out there knows this company will sue you for 5,000 Rand if it needs to, but you're going to be paying your debts. So obviously when it gets to an attorney, the plan will likely involve litigation, summons as a last resort. Again, like I said, internally there are a lot of spectrums. So if it's a yes, we always issue summons, that's great, that's your prerogative. If it's a matter of only over a certain amount we issue summons, that's your prerogative. So it's very important to have these sorts of discussions with an attorney, and also for an attorney to be frank with you to say this is what it's going to cost, so that you can make these types of considerations. When is an amount of debt worth it to pursue by legal action, and when is it just absolutely going to be a waste of your time and your money? And then after having been handed over, it's critically important that the company, you as a career provider, don't, or a service provider, don't make any further contact with that debtor. Debtors love to play the attorneys against the company itself. So sometimes you'll send your correspondence as an attorney to the debtor, and they literally just respond to the company or to your client. That takes the power away from the attorney if the company actually responds to them or says to them, yes, we can talk, or whatever the case may be. Again, absolutely your prerogative. If your client comes to you and says, I'm just going to pay the money, please just get these attorneys off my back, different story. But if they come with stories and promises and all sorts of things, these things generally are better dealt with by the attorney, because they are generally just an effort to delay the inevitable. They know, okay, we've gone the extra mile, we've got an attorney now, but let's make another promise to pay to the client directly and see if I can get the attorney off my back. 99% of the time those promises don't come to fruition, and they've taken away the power of the attorney, because now the client knows they can bypass the attorney and go directly to the client or to the service provider. And then obviously your attorney will update you on the process. So that again comes down to the agreement between yourself and your attorney. Is it something that's going to be on a monthly basis, on a bi-monthly basis, or whatever the case may be, how much info you need, all of these sorts of things. But that's all part of the let's work out a plan of action, what's got to work for both you the attorney, and in general. So like I said, top tip, I said at least 50% of collections handed over settle after the first demand to the debtor. Like I said, just the notification of handover. To be honest, it's actually higher than 50%, but let's not be boastful. Let's just go on 50%. And do not underestimate the power of an attorney's letterhead. Like I said, when your client gets a letter from an attorney or an email from an attorney or whatever the case may be, they know you've now had it. You are tired of their stories, of their promises, of all of these annoying tactics that they're pulling. This is it. This is the end of the line, buddy. You're going to either pay it up or summons is going to be issued. And like I said, if the intention of not paying was just a mere I don't have the cash flow at the moment, or just bad business sense, or whatever the case may be, usually they pay on receipts of that notification of handover. Okay, guys, we've come to the very, very end of our webinar. So again, I'm going to leave some time and space for any questions that anyone has on their mind. If it's other questions relating to, but not specifically covered in the webinar also, please do feel free to ask.
Absolutely, Cathleen. I think you get such a high hit rate because people are scared you're going to come after their cat, aren't they? Hey, geez, that's stuck with me. Folks, before we go into Q&A, thank you for spending this hour and a half with us going through this content. Thank you, Cathleen, so much for giving of your time, giving of your expertise, for the edification and for the education of the community and the business community at large. So, folks, We do this Think Legal campaign free of charge. We do it for educational purposes. And there are a few ways in which you can help us. You are obviously welcome to join us on our Think Legal Company Law WhatsApp group. It's called Think Legal Business. If you are interested in getting involved on that, please do drop us a line in the chat box, and I will make a plan to add you to that WhatsApp group. For those who are on the family law group already, it is very much the same. It is a younger group. There are less people and less of Mervyn Vermeulen shouting at people for messaging on Saturdays. We do have the same rules: no after hours messages, no hate speech, and no spam, to try and keep it less spammy. We do Think Legal Conversations. These are posted on YouTube as well as on our website, vermeulenlaw.co.za. I will be having a conversation with Cathleen in the next couple of weeks, which we will post also on Top Tips. And Cathleen has also done a blog, which you can find on our website. An exciting one coming up for the family law guys. I managed to sit down with Leonie Hennig earlier this week, and we had a good 40-minute conversation on what is parental alienation, what is not parental alienation from a social worker's point of view. So that will come out a little bit later. Think Legal Law in 3 minutes or less. We are preparing a few ones on debt collection, which will also roll out during the month of May, which we will also distribute. And then obviously our webinars. Webinars coming up this month, 20th of May, my birthday, just saying. Will be understanding civil contempt of court. What is a civil contempt of court application? How does it work? What do you need to prove, and what are the implications? Then early in June, on the 3rd of June, I have Advocate Virash Shrikison, who is going to be presenting mediation advocacy, how to prepare your clients and yourself for mediation. And then the later webinars in June are still to be advised. Thank you so much once again, guys, for attending today. These are some of the initiatives that we do. If you would like to get involved with any of them, please do let me know. If you have any ideas for webinars which you would like to see in the future that would help you in your business, please do let us know, and maybe we will be putting on your webinar sometime soon. So let's go on to our very last slide, which just tells us a little bit about what Cathleen does and who she is. What questions have we got, guys? And I think for those who are comfortable, you are welcome to use the raise hand function and talk to us at this stage. Kathleen, incidentally, you know, whilst we're busy waiting for some questions to come in, and for people to be a bit less calm, it is after all almost Friday afternoon. Now, in terms of this sort of thing, you know, implementing a debtors policy, how does one go about doing it? You know, is there a tick list that you work according to? What is the timeline? It's obviously a very daunting thing. You know, if you don't have a data strategy, how do you get one?
Mervyn, my honest advice is you can speak to someone who has these or this type of knowledge or has these things implemented already. Depending on the budget and depending on whether you're willing to spend some money on it, obviously, I would actually suggest just appointing someone to get these processes drafted and in place for you. It's very hard to decide where to start. It's very hard to know exactly what is important. And this is also, it's one of the services we offer, but this is why we do these types of information sessions, so that you have an understanding, a broad understanding of what actually has to go into a sort of debtors policy, so that everyone has an idea of where to start at least. But I would say use the webinar as a skeleton, work it out from there. If it's something that's completely, you have no idea where to start, you have no idea where to go from, even with the information presented, it's best to actually discuss. I've got a lot of expertise and clients who I'd help with these sorts of things, so it's great to get some business in, obviously, and we can help you with that. But obviously, if it's something that you absolutely don't have budget for and just want to do it yourself, use the webinar as a skeleton and work it out from there.
Yeah.
And then obviously, if you're on the WhatsApp groups and you're on those supports type of and communication methods, then you can also obviously ask questions there, get some clarification. But it's not something that you can't do completely on your own. But it's hard to say, listen, this is what you do in 2 minutes and an answer. It's a quite involved process, and it's quite involved in the sense that we have to sit with the company, find out how they do it in general, how the invoicing works. What are we looking at in terms of staff contingent? What are we looking at in terms of budget restraints? All of these things are important to consider before even starting with drafting a policy. Once the policy is drafted, obviously it goes further by saying, okay, now this policy has to be implemented, and implementation thereof always will involve training of the staff that's going to be involved in the actual day-to-day running of that policy. So yes, giving a quick answer in 2 minutes is very hard, but if you genuinely do not have a budget to speak to me, then I would say use the webinar as a skeleton and work it out from there.
Absolutely. Attorneys are so scared of self-promotion, so I'll promote you for you. How's that? So guys, please do reach out to Cathleen. Her email address is there. I know she's a coffeeholic like I am as well. So if you are wondering about this, please do get in touch with her, and don't be scared to ask. We all have the tendency to be afraid, to want to get our own back, for work that we've done. And don't sit on your laurels.
And also, sorry, Mervyn, if I may, I don't charge consultation fees on consulting on whether you'd be, or whether the actual product would be applicable to you. So yes, if you want to catch a coffee so I can explain what the process is about and whether it would be applicable to your company, then I'm not going to charge a consultation fee. So for the time being, vra is vry.
Vra is vry. Excellent. And good. So asking questions is free, but the answer might cost you. So, guys, have we got any further questions before we wrap up and we all head into the weekend? It's been a short week. It's been a long week. It's been a hectic week, I think, for most of us. I think a lot of us are ready to go and laze by the pool if it wasn't so cold outside. Any questions, comments, queries in closing, folks? This is the part where I usually put in some filler, but it has indeed been a very, very long week. So I think on that note, guys, thank you so much for joining us. I know some of you joined us a little bit later. We will be making the recording available to you. We'll probably be distributing it on WhatsApp, etc. In the next 2 or 3 weeks. Please do yourself a favor and go and have a look on our website, Kathleen's article, which she wrote on the best practices in terms of managing your debtors book. It really, really is worthwhile. Please do reach out to her, and please do reach out to me if you would like to form part of our Think Legal Business WhatsApp group, where we share from time to time, without being spammy, some very, very important information regarding and amongst other things, debtors management. I see there's one person typing, so just before I close off, I'm going to let them ask a question if they've got one, and it might just be a message saying thank you. Cool. Latifa asked add it to the group. Will do for sure, Latifa. Thank you so much for being here with us today. Right, guys, on that note, thank you, Cathleen, for giving of yourself, your time, your expertise, and for letting us in on a little secret that you have a vendetta against cats. So, folks, thank you for being here. Have a wonderful weekend, and we'll see you at the next webinar on the 20th of May on civil contempt of court. The information contained in this video is distributed free of charge for educational purposes. Whilst we have taken all reasonable steps to ensure that the information contained herein is correct and up to date, insofar as the law in South Africa is concerned, the law remains a nuanced and complex field of study, replete with many exceptions and conditions. Please, therefore, do not utilize this information as legal advice, which it is not. When in doubt, consult with a legal professional. For more information, please feel free to contact our offices.